It's your fault. No, it's your fault. No, it's your fault. The market's roaring hot and people are looking for someone to blame. March home sales reached a all-time record high for the month. We have no population growth. We have a weak labor market. But still, the sales are surpassing even the 2016 foreign buyer boom. They're unbelievably high sales numbers right now, but also new listings are up. They were up 86% year over year for the month, which is setting a record high for new listings as well. So in other words, whether upsizing, downsizing, or simply relocating, people are on the move. So let's dive in and see how this is impacting the Greater Vancouver real estate market. We're going to start with the detached housing market update, then condos, then we'll talk a little bit about some changes in the federal financial regulation space. So detached sales were up 126% year over year. Keep in mind, that's being compared against a weak base because in March 2020, the numbers were really low because of the pandemic shutdowns. Regardless though, we are seeing record highs since comparable to March 2016, which was the foreign buyer boom. New listings are also hitting record highs, so people are clearly not afraid of listing their home for sale during the pandemic. This is a myth that's been circulating for a while now. So what gives? Record sales and new listings. This is why it's so important to look at both the sales to actives ratio and the months of inventory ratio. Both are capable of filtering out the noise, and they're strong leading indicators of future prices. The sales to actives ratio for detached homes in Greater Vancouver rose to 51% in March, and that's the highest since April 2016. The acute shortage of inventory continues to drive bidding wars. Here we see that 55% of detached homes sold for above the asking price. Basically, every metric coincides with the last blow-off top that we experienced in 2016 in the spring. So if this isn't the top, we're pretty close to it. Remember, the cure for high prices is high prices. Higher prices eventually bring on opportunistic sellers looking to cash in on massive windfalls while also fatiguing buyers as they become demoralized with the existing market conditions. Prices are also going through a blow-off top, up 4.9% month over month per the home price index. So on an annualized basis, that would create a 60% price growth per year, which is clearly not sustainable. As of right now, the MLS home price index shows 17% year over year growth, but given that this is a lagging indicator, it will continue to rise in the coming months, even if the market cools from here. Next up, let's look at the condo market, but maybe first, I'll just tell you that buying conditions in the detached market are the worst they've ever been, other than the very peak of 2016 in the foreign buying boom. New listings are ramping up, and we're seeing early signs of buyer fatigue emerging. So proceed with caution in the detached housing space. Condos. As mentioned in the last month's report, I remain very optimistic on the condo market. It's largely been ignored throughout the bull market. Condo sales have been setting record highs for nearly 6 months now. March was one for the record books too, setting new highs again. Similar to the detached market, new listings are also way up and printed new highs. However, again, one needs to focus on the sales to active ratio along with the months of inventory to filter through the noise. The sales to actives ratio has gone straight up, hitting 66% in March. That's the highest reading since August of 2017. Meanwhile, the months of inventory has collapsed to just 1.5 months. That's a very strong seller's market, ridiculously strong. So it's very impressive though, considering we've been hovering around 4.5 months of inventory from June to November. So I've been saying it for a while now. It's inevitable that the condo market would have to follow the other two in due course. You can't have detached and townhome prices inflate by 20% or more and think that the condo market will just simply stay flat. So condo prices are rising, while the year-over-year change in the MLS Home Price Index suggests it's only up 4% from last year. They just moved 2.6% in 1 month. While I'll stop short of making any predictions, what I can tell you is that every data point suggests condo prices are moving higher. There is a clear path ahead. Next up, we really need to talk about OSFI, and that is the Office of Financial Services and Institutions, something like that. They're the people behind the mortgage stress test, and they have just announced that they're reviewing it and they're seeking input on it. So I'm gonna put some details in the newsletter here, and there's going to be a blog post on VancouverRealEstateToday.ca from a mortgage broker that I work with, and that's really where you should look for more insights. The bottom line is, it's looking like in June they're going to raise the stress test to, so when you are you have to qualify to be able to make payments at a number of higher than 5% interest rate, even though you'll be paying less. They just want to make sure you can qualify it. Now, this is just an attempt from the government to cool the housing market, because, as I said, they're looking for someone to blame. As we've said in previous videos, previous newsletters, this housing boom was manufactured in Ottawa through the low interest rates. It's a necessary side effect of keeping the economic recovery insured and going. And so while it's been manufactured in Ottawa, it could very well get crushed in Ottawa as well. And I think this is just kind of a step forward to bring some cooling to the market. It will reduce purchase price, and this will be for only on non-insured mortgages. So that's like if you have 20% or more down, you don't have an insured mortgage, and in that case, you'll have to qualify via the stress test. So that's it for now. Check out the blog post for more insights on the stress test changes that are coming down the pipe. And give me a call at 604-313-9805 to talk about your specific situation, especially how all of this impacts you if you're wanting to sell your property, if you're wanting to buy a property. All these things change really day by day. And today is April 9th, 2021. So my information could be out of date by tomorrow, depending on what kind of announcements get made. So anyway, that I would say that's unlikely, but reach out to me. Follow me on Instagram at Josh Kepke. Check out the YouTube page, Vancouver Real Estate Today. Vancouver Real Estate Today, also on Facebook. And next week, we have a brand new season of Full Disclosure, the Pro Tips series, where you get the best marketing tips if you're selling your home, and the best buying tips. So tips for buying and selling in Vancouver real estate, where we're going to cover things like contingent offers, is there a bad time to sell your home, request for repairs, and so much more. So be sure to come back for the next season 3 of Full Disclosure. And if you haven't seen the other seasons, go back and check those ones out. Lots of good nuggets in there. So that's it for me. I'm Josh Kepke at McDonald Realty and VancouverRealEstateToday.ca, and we'll see you next time. Bye for now.